What's going on, everyone? Lilith here. Bitcoin and Bitcoin crashing. Bitcoin has crashed previously in history. Bitcoin is currently crashing as I speak, and Bitcoin will crash in the future at some point when it reaches another all-time high and it corrects. Point being, I'm not here to spread FUD, aka fear, uncertainty, and doubt, but rather, if we anticipate a crash to happen, or let's say the crash already happened, are there ways for us to still make money from the Bitcoin we are holding? This is the question we're going to answer here today, and how we're going to do it is split this video up into two parts, where part A is basically, if we anticipate a crash, what are some of the steps we can preemptively take to still profit on the other side? And the second part being, let's say the crash happened, what can we do now? And so with that, keep it simple, we'll get straight into it. As we go through certain methods, there's other videos on the channel which go into a deeper dive of what I'm talking about, so feel free to check those out. So starting off, let's say we think a crash is happening, what could we do? So for example, let's say that we bought our Bitcoin at $50,000. And for this example, we have exactly one Bitcoin, no more, no less, and 50K is where we bought our Bitcoin at. With the crash or no crash, we're already in the red. Now, we think it's gonna go even lower than 40K. Who knows, maybe to 30K, maybe to 20K, etc. So what are some steps we can take if we actually think it's gonna go down? First, we can take our Bitcoin and actually swap it for stablecoin. This all makes sense really soon. So if we go from 50K our purchase price, and then now it's sitting at 40K, and we exchange 40K worth of Bitcoin into stablecoin, and for this example, I'll use USDC, aka USD coin, then basically we're converting what our Bitcoin is worth in 40K at that current moment into 40K fixed in terms of USDC. Stablecoin doesn't move in value. There's no ups and downs above that same par value of $1 per one USD coin. And so with that, you're basically converting that Bitcoin worth $40,000 into $40,000 cash essentially, and it will just be sitting there. The advantages of it sitting there is that not only are funds ready in USD coin to be converted back into Bitcoin, for example, if Bitcoin goes to $30,000, now you already have 40K sitting there, so you can actually use that coin immediately and buy Bitcoin at that price. The point of this is that there are funds available instantly when you actually want to trigger swapping back from USDC back into Bitcoin. AKA, if it goes down to the 30,000, you're immediately able to execute that order. In a conventional sense, if you don't have any involvement of stablecoin and you're just using fiat, aka USD, the issue that comes up is that, for example, it may take 2 to 3 days for funds to go into your account and 2 to 3 days for them to come out. And moreover, if you actually use cash to buy Bitcoin, with everything including processing, depending on which exchange you're using, you may not have that Bitcoin instantly today. You may need to wait 6 days, 7 days, it just depends. With Bitcoin's price being volatile as it is and cryptocurrency overall in general being volatile in terms of the market as a whole, you can kind of know that 6 days is not just 6 days in the stock market, but 6 days in crypto is like an eternity. Coming back to the USDC that we have sitting in the account, depending on which exchange you're using, whether you're talking about Nexo or Voyager or BLOCKFI or GEMINI or anything else, and there's videos like this on the channel which goes over reviews of exchanges and what type of interest rates you could be earning, essentially what I'm getting at is the USDC that's sitting there, while you're like a sniper waiting to strike and buy your BTC, you could still get interest on that USD coin. At the highest level, if you're looking at 6, 7, 8% plus, all the way up to 12% for USDC interest per annum, then basically you're looking at, let's say, 1% a month in interest. So if you're waiting a month to hit your price target, at least that $40,000 that we were talking about is basically 1% of that is $400. I'm using real values as if we assumed we had 40,000, but you can use your own numbers, and the point being that you're not just sitting with cash in the account just waiting for a moment, which may or may not happen. To summarize, by having this USDC converted from our Bitcoin, we're basically allowing the opportunity to get in at a lower price, which in fact can give us a better deal entry, like a wedge gap deal entry, or in general, just allowing us to decrease our average cost on our total position or items like this. From here, another way to make money, and this is common in markets in general outside of cryptocurrency, but it's basically dealing with Bitcoin options. If options sound scary, there's videos on the channel where we go step by step talking about Bitcoin options specifically, so feel free to check it out. In the options world, it's very simple. There are a lot of factors that affect option contract pricing, but at the highest level, when we think, hey, Bitcoin's gonna go down, then basically there are two types of contracts. You got your calls, you got your puts. With a call contract, basically if we think Bitcoin's going up, then as Bitcoin's price goes up, the contract price also goes up. And so by trading these contracts, you're still able to make money if Bitcoin goes up. But since we're anticipating a crash, let's say if we think Bitcoin's going down, we may buy a put contract. And so as Bitcoin's price goes down at the highest level, our put contract would actually go up. And so with that, you're basically hedging the amount of loss you could potentially incur. So AKA, you're not only limiting your downside when Bitcoin actually goes down, but in fact, depending how far and how fast it goes down, you could actually make a lot of money through selling put contracts. Moving on to our second part here of saying, hey, Bitcoin in fact has crashed. And so coming back to our assumption of saying, hey, we bought our Bitcoin at 50K, it went to 40K, we did nothing, and so now it's at 30K at the time of this recording, and so indirectly, yes, it's crashed essentially from where we were before at 50K, and now we're sitting here at 30K. If we go back to the methodology of what we used when we anticipated a crash, so let's say that right now Bitcoin's at 30,000, and let's say we think it's going to go, let's say, to 20,000 or even lower, we can still do the same method of converting $30,000 worth of BTC into USDC. And so like this, it's the same situation where you're waiting for the next target. Target means price target, and so if you're waiting for that region and it never shows up, then in fact you've converted your USDC and you're in the same situation as we talked about previously. You'll get interest on your BTC or USDC depending on the exchange you have it in, but basically if you sell your Bitcoin for an actual loss, you'll basically take a realized loss. And when you take a realized loss, it's over. You can't earn interest on your Bitcoin or USDC or nothing. You basically bought at 50K, sold at 30K, and then that's it. It's done. When it comes to buying and selling, it's all about having a plan. And so if there's no plan, but you've been making gains on gains, that's great. But if there isn't a process or methodology, is it really repeatable in the long term? That's the real question. So with that, the most important part is always have a plan. Coming back to options and now the fact that Bitcoin has crashed, we bought our Bitcoin at 50K, it went to 40K, and currently it's at $30,000. And so with it being at 30, what are kind of the opportunities that we have at this time? Within options, you got your buy side and your sell side. And so initially we were talking about buying contracts to actually protect our downside risk or hedge our bets essentially. And so on the flip side, now that we have the coin in fact, and we're sitting on a position that's lower than what we actually spent in the first place, we could technically and realistically sell a call. And for example, it's at 30K, we could sell a call for $50,000 at a future date. And as long as someone on the other side is willing to buy it, then basically they're willing to buy our same coin that we spent 50K to get. And actually we'll get something known as premium. Premium is what's given to us by the buyer of the contract, and we're the ones selling it. And so this premium is basically the quote-unquote reward for us taking on X amount of risk. When it comes to selling a call, the risk is, hey, if Bitcoin goes to 100K and we agreed to sell it at 50K, then some premium, let's say we received $2,500 in premium, aka 5% of 50K up front, then basically our average cost would go down to $47,500. The advantage here is that we receive some premium to decrease our average cost. And on the flip side, if Bitcoin goes to the moon or goes past 50K by expiry, we would basically be leaving money on the table. The overall point here is that without any involvement of options and option contracts, with Bitcoin sitting at 30K, no matter how volatile Bitcoin can be and how the cryptocurrency market is, waiting for it to go from 30 back to 50 is basically, we're talking about a 66.6666% gain that's needed. And not that it's unlikely, but if we want to see that fast or guaranteed, it may or may not be possible. But with option contracts, we can basically collect premium until a certain point happens. And so with that, we're basically collecting by holding onto our position. And if we had no Bitcoin, it would never happen. With that, thanks for coming to the end. In the name of the crash,